Hello everyone, welcome to another edition of Time Out with Oluyomi Martins. And this is your favorite guy, Oluyomi Martins from the city of Lagos, Nigeria. This is where we discuss everything finance, banking, passive income, investing, and all the things that will put money in that Gucci bag. If this is the kind of content you want, please smash the like and subscribe button, drop me a comment, and let me know what other kind of materials you want me to produce so that you're always having fun with me on this channel. Now let's dive into it. Today we are diving into the question, are banks stealing your money? Let's uncover the hidden practices that could cost you a lot, right? I know a lot of people will say, banks are thieves and all that stuff. Just grab a coffee after you smash the subscribe button and listen to me real good. The first thing we are going to be talking about today is safeguard our money, right? Many of us trust banks to safeguard our money, which is very, very true and correct. But do we truly understand where our money goes? We put money in the bank. Do you really understand where your money goes, or you think that the money is just kept in the vaults? In this presentation, we will explore the surprising ways banks might be taking more from your wallet than you actually realize. Because your money is not just sitting in the bank. There are so many charges that your accounts are debited with. Some are questionable, some are not, but we'll learn all these facts pretty soon. Now, like I said earlier, the first thing that catches my fancy is understanding bank fees. First, let's talk about banking fees. Many banks charge monthly maintenance fees. That's account maintenance fees, right? Which in Nigeria basically is 1 per mil. That is 1,000 for every million naira. So what you do is 1,000 divided by 1 million naira will give you the account maintenance fees that you are supposed to charge on a particular amount. And this money is supposed to be charged on customer-induced transactions. What do I mean by customer-induced transactions? It is the transactions that the customer gave authorization to be debited from his account. For instance, if an account is being debited for taxes right now, you are not supposed to pay account maintenance fees on the taxes that your account is being debited with. Anyway, we are going to be talking about more of that in other episodes and all that stuff. Now, let's take the United States for example. Right? Did you actually know that the average American spends over $300 a year just on bank fees? In Nigeria, I'm sure it will be probably similar or slightly less because obviously our per capita income and and all that stuff is a bit lower than what's obtainable abroad. That money is money that could have gone towards savings or investments in the first place, right? Now, another aspect we have to look at is the low interest rates on savings in the first place. The Central Bank of Nigeria standardized things basically. Banks are supposed to give you a minimum of about 30%, if I'm not wrong, of MPR rates as savings account interest, right? MPR is monetary policy rates. They are supposed to give you a minimum of 30% as your interest on savings account. Has any of you actually checked whether that figure has been given to you? For instance, if MPR is 12%, for instance, that means the interest on your account, on your savings account, is supposed to be a minimum of about plus or minus 4%, right? I hope you understand the math I'm just working, right? But how many of you have actually consciously checked if you are being credited with that amount? For current account, it doesn't affect current account basically, because current accounts do not, the way they are structured, they do not attract interest and all that stuff. Now you see you are losing money because nobody actually bothers to actually calculate. But note, we are talking about people who do not withdraw regularly, because there's a threshold on how much you would have withdrawn over a period of 1 month that you won't be entitled to interest rates anymore. So let's get that at the back of our mind so that we don't jump into unnecessary conclusion that a bank is not doing what they are supposed to do in the first place. Now, let's move along. Hidden investment risk. Have you ever considered the fact that, as I said earlier, banks are not leaving your money in the vaults and not doing anything? Your money is liability to them, so they need to turn your money into risk assets by giving it out as loans, right? So that's how banks make money in the first place. If not, they won't be making money. You understand? It's as simple as that. While you might think your money is sitting safely in your account, banks often use the funds to invest in higher risk assets, right? See, let's look at what happens in the States again, because I don't have the Nigerian figures presently. Last year alone, banks invested over 1 trillion of customers' deposits, prioritizing their profit over financial safety. Well, don't let me talk that way anyway, right? But they are meant to, give out loans. Because if they don't give out loans, right, the economy won't be greased in the first place. But they need to also ensure that they give out loans based on prudential guidelines. You understand? Which I believe a lot of banks are following. Right? That's why the CBN is there to regulate them as a regulatory body and all that stuff, right? But we are also being passed on the risk of credit indirectly, even though we are not the ones lending to a third party. So you have to keep that at the back of your mind, that the risk of credit to a third party, the loans given out by a bank to a third party, you are also bearing some of the risk indirectly, because if the bank folds up, you understand, you are affected, well, to an extent, because there's NDIC, Nigerian Deposit Insurance Commission, and all that stuff, who will pay you to a large extent about 500,000 or thereabout, or whatever is stipulated, in the present policy, because it's constantly being reviewed. I'm not sure whether it's 500,000. Please, if you are sure of the figure, whether it has been increased to 5 million now, I'm not sure. I think it has actually been increased to 5 million, but I need to check. Please, let me check. Anybody who knows the exact figure, in fact, it's a quiz. If you get it, there's something special. Drop me a comment. Tell me whether it's 5 million or 500,000. I purposely talked that way because I know a lot of you are not sure of the figure. I'm actually sure of the figure right now, but I actually just want to pose it as a quiz, right? So let's see who will get the quiz. Drop me a comment if you know the amount that you will get, just in case your bank goes under. Just like Heritage Bank went under and NDIC had to step in, and they are already in the process of paying some bank customers of the defunct Heritage Bank, and I'm sure they will get their money pretty soon. If you're actually affected in the Heritage Bank saga, also leave me a comment and tell me whether you have been paid by NDIC, and tell me what's happening to your funds right now. Now, another juicy part that I would like to talk about is loan interest rates. Loan interest rates have gone off the roof right now, right? There is little we can do about it, right? But I'll tell you also what you can do about it as well. Loan interest rate going high, right, is based on what you call the monetary policy rate as well. If monetary policy rate is high, banks are supposed to benchmark the amount they lend out based on monetary policy rate. So, for instance, if the monetary policy rate of a country is, for instance, let's say for sake of discussion, 26%, right? Banks would not be able to lend at 26%, right? Because of cost of funds and all that stuff. They have to lend money above the monetary policy rate. And when you're talking about cost of funds, you have to even talk about so many other things, because how much are they getting? Are they borrowing to finance a loan? That is on one hand, right? Are they using depositors' money to finance a loan as well? That's another way of looking at it. The depositors' money they are using to finance the loan, they are also paying interest on that amount, right? That's part of the cost of funds we are talking about, right? Apart from the fact that they have to benchmark based on the monetary policy rate in the first place. Now, the depositors' money can come in different ways. It can be savings accounts, it can be term deposit and all that stuff. Now, interest paid on term deposit is normally larger very much more larger. For instance, if the interest rate paid on a term deposit is let's say 15%, that means 15% is the cost of funds to lend that particular amount being kept in the bank as fixed deposit. So if the bank is going to lend out maybe $1 million that they received at 15%, 15% is their cost of funds. So they have to lend higher to someone else, so that they can make their own money out of it also. Now, what you should realize when you are lending money from the bank is the fine prints, which a lot of people do not actually read. And what am I talking about? Fine prints, right? Many customers overlook crucial terms in their bank agreements, right? That can lead to unexpected costs. Remember, banks are in business to make money, and that fine print can sometimes hide fees that catch you off guard. Let me give you an example. A customer of mine that I was reviewing his account, right, got a facility from a bank, and I saw in the offer letter that he had management fee, he had processing fee, he had so many other fees. Some of these fees are replicated. For instance, if you are charged management fee, you are not supposed to be charged processing fee as well. Again, it is not done. Do you understand? That is against what the CBN Guide to Bank Charges stipulates and recommends, right? So you need to be careful how you interpret those fine prints in your banking relationship. Some of us also have special accounts that, we don't bother reading the conditions inherent in operating those kind of special accounts that we have, right? So if you have bank issues, consult your accountant, consult your bank statement forensic auditor, consult your lawyer, consult anybody, your financial advisor that can actually put you through, especially when your volumes are high, right? When your volume is high, when the volume you do is high with a bank, you need to engage a specialist to review your relationship periodically. Now, that's it for fine prints. Now, we actually have alternatives to traditional banks, basically, right? But these alternatives might include your credit union, digital banks, personal finance apps, and things like that. And they have options, for lower fees if you choose to, flexibility, better interest rates. They focus on transparency. Exploring these alternatives can actually empower you if you choose to, right? But they have their own pros and cons as well, because they might not be able to give you that kind of relationship you are having from your current commercial banks in terms of loans, credits, and all that stuff for your large projects and all that stuff. So while you have alternatives to traditional banks, you need to also keep adequate relationship with your commercial banks, because you can't do without them, right? But while keeping your relationship with your commercial banks, please ensure you get a specialist to review your positions periodically so that you don't run into troubled waters, right? That is very, very important, so that you don't run into troubled waters. Now, we have seen how fees, low interest rates, and hidden risk can eat away at your hard-earned money. Knowledge is power, don't you think? By understanding these practices, you can make informed decisions about your finances and protect your wealth. Now, before I go, let me tell you the one secret. I've been talking about bank statements and all that stuff, the possibility of the bank, probably, I don't want to use the word stealing from you, right? But it's in the title already. I actually wrote a book on how to conduct a bank statement forensic audit, which you might find very useful. I'll leave the link in the description. You can actually get the e-copy as an individual or a corporate for your accounting team and all that stuff, and even for your personal knowledge from stellar.co, or you can get at copies at the Chartered Institute of Bankers at Adeola Opo, or the Institute of Chartered Accountants at Idowu Taylor. Both are in Lagos, Victoria Island, and I'm sure all the practical guides, formulas, and everything to review your accounts periodically, they are all embedded in the book. So if you have a copy being sold for $4,999, you can easily review your bank's position and all that stuff. And if you run into trouble, you can always contact me. But before you leave, make sure, hold on, just smash the like button, smash the subscribe button, drop me a comment if you have had issues with your bank and how you have been able to resolve it in the past. Until I see you again, don't do what I won't do. Take care of yourself. Bye for now.